Here we go. Ah, was she look in the mirror? Oh,
What is this? This is completely inappropriate.
why do they always act so outraged? So it was weird with him. It's like he knew what was gonna happen. Let's look at this one. Oh my god. Good God. Yeah, that car is ruined.
And I told you if you just called ahead, we wouldn't be standing here like this. It's 10 in the
I'm
morning.
aware of the time,
No,
Marcy.
you
I already said
fine.
it's fine.
This is not fine. Look at the floor.
Can we just? It's cold. You're the one covered in paint, kiddo.
Covered? She's
It's tracking all over the porch,
I
David.
see it.
You,
I
this
see
is the
everything.
third time in 2 weeks.
You think this is funny? You think you can just dump paint on my child and walk away? I know you're watching this and you are going to fix it. Look at her. You ruined her coat, her hair, everything. Purple, head to toe. Who does that? No, don't you defend them. You have until tonight to call.
Listen to me right now. You think you can ignore my calls and hide behind some little camera? I am soaking out here because of you. I warned you last week, and now look at her. Look at her.
Mom, it's cold.
I don't care if it's cold. It's the truth. You sent her home like this. Blue paper. Okay, you see this? Do you see what they've done? We talked about boundaries, about respect, and look at her porch. Everywhere. This is not funny. It's not art. It's disrespect. You are cleaning every bit of it. You hear me?
I told you it was a project. You're supposed to watch.
Well, it's not.
Rain, and I told you if you.
All right. Start with a little comedy, but hey. Let's get right into it. So here is one of the videos I wanted to show you guys. Now I found this guy a while ago. His name is Humphrey. And Humphrey actually does a lot of good financial videos. But let's listen to this one.
So what if I told you that Coca-Cola is one of the rarest 50 companies in the world? There are only 50 kings in the stock market world. Dividend kings, that is, and Coke is one of them. For every share of Coca-Cola that you own, you get paid 3.01%. That's known as the yield on the share price of Coca-Cola every year. This is known as a dividend, which is a portion of profit that the company passes back to you just for owning their shares. A dividend king is a company with 50 or more years of consecutive dividend increases. So here's the full list of them on the screen right now. Make sure to take a screenshot. By investing in these, you are virtually guaranteed a dividend, which is a true form of passive income. Follow me if you like this. So what if I...
So I'll give that video a thumbs up. He is exactly right. Dividend kings. Now, one thing you need to understand, a dividend king has paid dividends for 50 years, but you have to listen to the number. 50 years. That means they've been around for a little bit, right? Now, one thing to know is that most companies don't pay a dividend. Most companies do not pay a dividend. Of the companies that do, the average dividend paid is about 3 to 5%. But that's not even some of your top-notch companies. But let's look at one that was probably on his list that I know is a dividend king. PepsiCo. So Pepsi pays 4.07%. Their quarterly dividend is 1.42. So what does that mean? They pay you 4.07% of whatever that share price is when you buy it, right? So, and that comes out to $1.42 per share owned. So I'd already did the math here, but look, 1.42 a quarter is $5.68 that they give you back. So if I bought a share of Pepsi today, it will cost me almost $140. But when their quarterly earnings come out, they would kick me back $1.42. Now, after 4 quarters for the year, I would have $5.68, right? But let's see what I don't think it's a good trade-off. I wouldn't buy Pepsi for the dividend because it's so expensive. I would buy it for its equity. Now, let's see if buying it for its equity makes sense. What is equity? Equity is when you buy an asset, how much it increases in value from where you bought it. So if I had bought a share of Pepsi for $40 or for $39, right now I would have $100 in equity. So if I sold that share, I would get 100, what did I say, $39? I would get $139.91. My profit would be $100 because I spent $39 on it. So it'd be my profit would be $100.91. Make sense? But that doesn't happen overnight. Let's see if Pepsi's worth buying for the equity. 5 days, they're down 1%. 1 month, 6.5. 6 months, they're up 2.81. Since January 1st, which was 9 days ago, they're down 2.35%. Year over year, they're down almost 2. And in 5 years, over 5 years, they're down almost 3 years. Yeah, I would say no. And think about it too. You want to always invest in the king of the sector and maybe the number 2. This would be the number 2. The king of the sector is this one right here, Coca-Cola. And since he just mentioned it in his video, let's look at that one. All right, so they pay 2.89%. They pay less of a dividend than Pepsi does. And their quarterly dividend is 51 cents. Now, I'm not going to do the calculator on this one because we know 51 times 4 is $2.04. So for every $70 you spend, they're going to give you $2.04 for the year. Let's see if the equity play is investable. Okay. All right. Year over year, 15%. That's good. Yeah, 15% is actually a good return for a company for the year. For one in the S&P 500, that's usually 10%. It did 15. I'd say they did great. The past 5 years, 38%. See, this is why I don't invest in Coca-Cola, because it's a good company. It's a strong company. It's been around for a while. But here's the thing. I invest in tech, and I get way more than 38% in a year. And I started investing late. I'm trying to play catch up. So 38% in 5 years is not enough for me. But trading has considerable risks. Oh, and I forgot. Over here, we don't do the Nike tech. You know, it's all about protein shakes and quarter zips. I was gonna say, and that's a salute to him. I forget his name, but y'all know, if you know who I'm talking about. If you know, you know. My wife got me 2 of these last winter. Not this. It might have been winter of 2024 or very early in the winter last year, 2025. She got me this one, and I think she got them from Costco. And I actually like the things. You know, what I was wearing was pull over the head hoodies, but I don't always want my head covered. Or to just have a hood flapping at the back. So when she came home with these, I was like, oh, this is actually nice. And I have like a green one. But we don't do the Nike tech. I don't even know what a Nike tech is. What is a Nike tech? He does not squint like that, by the way. What is a Nike tech? I've seen these things. 450. Excuse me? All right, so let's talk about something else you shouldn't spend your money on. I don't even know if they pay a dividend, but let's see. From what I last saw about Nike, they going down, baby. They do pay a dividend, 2.49%. Quarterly dividend is 41 cents. I don't know why I was going to say 40 bucks, but I was. Full disclosure, that's 14. Let's put our heads on right and let's not be dyslexic. $1.64 a year for every share you hold. Let's see if the equity play makes sense for 5 days. Sure, for a month. Okay. 6 months. Since January. Now, since January, I looked at the chart before. Now, Nike was going down, and you'll probably see it on the 5-year chart. I know you will. But remember, year to date, they may be up 3%. But remember, it was just Christmas, the holidays. So people bought a lot of Nike throughout the holidays. So that growth was probably seasonal, more than likely. I know it was seasonal. Thus, because it happens every year, hence the word seasonal. Or it's annual in that season. Anyway, so don't be fooled by this. It's not a lot of growth anyway. It was probably more, but it probably came down like right here. See, it was 66.35. So yeah, it was a little more, but don't be fooled by that. This is where the peak was. But anyway, it's okay. Year over year, they are down 7%. Now, they were at 78.33 in July last year. And, here we go. I found the zenith. 81.72 last February. So that's year over year. And see, like I said, 5 years, they going down, down, baby. So would I put my money here for dividends? Heck no. Not when in 5 years I'm going to be out 54%. Now, if it could kick me that much in dividends and even it out, Nike's been around for a while, maybe I might put my money there. Nvidia pays a dividend as well, but it's not much. I know that. Dividend. Something fell. All right, see that dividend yield? Not much. But you know what? Nvidia does not need to sweeten the pot with the dividend for their investors because theirs is the equity play. They make a lot of money in equity. And we're not even going to compute that dividend. No one cares. So 6 months, up 12%. Since January, they're down 3%. Don't be fooled. Year over year, they're up 36%. And see, this was what Coke was up in 5 years. In a year, they did that. Didn't I say that? I have Nvidia in my portfolio. In 5 years, 1,300%. Let's go max. You see it. Don't get me started. 461,962.5%. That's Bitcoin numbers right there. So why would I put my money into Nike just because, Nike's a good company? It's not good if it's not giving good returns. I'll tell you that. So anyway, that was a video that I wanted to show you guys. And again, his name is Humphrey. You can follow him for more. I make videos just like he does, but my videos are more motivational and inspirational. Sometimes I'll break down numbers and stuff, but he does teach a lot about financial literacy. I'm not telling you the Blacksmith podcast is a one-stop shop yet, but like Robin Hood, I will be the blacksmith. All right, so there is another video I want to show you guys. I just seen Humphrey this morning. I like this guy right here too. This guy right here is fantastic.
$100 of lottery tickets.
If you're a small...
Sorry.
$100 of lottery tickets to see if it's a scam. So I went to my local store and they said... So I went to 2 more stores and bought tickets ranging from $2 to $5. Let's see if I win. Starting off with the $2 tickets, I actually made $26 over the 10 cards. One didn't stop winning. $2 more. And another winner. After this, I moved on to the $3 tickets and my luck started to turn. I ended up winning $9 on 3 tickets. Onto the $5 tickets. I was hoping for some big wins here. Otherwise, I'd be absolutely cooked. But I only won $10 on 2 out of 10 cards. I ended up making $45, but really I lost 55. So never play the lottery. It's a scam. I bought.
See that? Now, people talk about playing the lottery. Now, I do like Mark Tilbury. I follow Mark Tilbury. I follow him. Just because you're teaching something does not mean that you don't have mentors in that something, right? Or you can't learn something from someone else. You always need to be sharpening yourself, even if you're just you're teaching others. College professors still need to learn themselves, right? So they still have more to learn. I mean, doctors put out articles all the time on their newest research or their newest surgery they might have done and the way in which they did a procedure. And not all doctors agree. Not all surgeons, not all, they don't all agree on the best way to go about medicine. So, with that being said, just understand you can always sharpen yourself by watching other people. All right. So that's Mark Tilbury. Now, he said he made $45, but really he lost $55. But you know, this is one reason why people go to Vegas. Because they are not counting the cost. They'll say, I went to Vegas and I won $5,000. But they spent $1,000 on their round trip ticket. They spent $1,000 on their room to stay there for 3 nights. I don't know what it costs. Just get what I'm saying. They spent $1,000 on their rental. They spent $1,000 on their food. They spent $1,000 on merchandise, and they won $5,000. Now, typically, that's breaking even, right? But they're not thinking about it, right? But if they also went to see shows and they also went on tours and stuff like that, they could have actually been out $5,000. They might have spent 10 on the whole trip, but because they won $5,000, they lodged that in their brains that this trip was a winning trip, and it had more value to it than not. Actually, you lost double the money that you actually won, but they put it in their brain that they won, and that's all people need nowadays. They chase that dopamine rush, right? And when you chase those good endorphins, it locks off your logic and doesn't make you count the cost. Count every penny, and then you'll see if it's worth it. And that's what he just did here. So that's all he's showing you guys. So now let's see. Let me see if there's another one. Let's do 2 more, and then we'll jump into this. This is Cuzzo right here. This is John Hope Bryant. Let's see what he's got to say. Private jet to make money, not spend money. Sounds promising.
You take a private jet when somebody else is paying for it. I'm on a jet. You're using a jet? Somebody was paying for it. It's part of an agreement, part of a deal, or my company is underwriting it, and it's a tax write-off, but that's not the case. You see me on Delta. If you see me out and about, I'm mostly on Delta.
He must live in Atlanta. That's where Delta's hub is. That's where their headquarters is.
You take a private jet to go make some money, not take a private jet to spend the money that you made, because you just cannot. You cannot sustain if you're doing private jets all the time. It was one for him, and he had one for his boys, and one of his for the third crew. I'm like, okay, this is only a matter of time. You just cannot. It's not about making it; it's about keeping it, right? And you got to be financially literate, and you cannot floss like this endlessly. I mean, my billionaire friends don't floss like this. They don't roll like this. I think you take a.
Let's talk about that. All right, so look, John Hope Bryant is a multimillionaire. I will say this. He is correct. Anytime you see an actual millionaire, people call them closet millionaires. No, but that's the actual millionaire, though. They'll say, oh, he's a closet millionaire. No, he's just a millionaire. That's the problem. Perception is the issue, right? The way in which us normal, regular earning people see millionaires and how they actually are is two different things. The guy driving the Range Rover with a nice suit and a briefcase trying to show the world that he is somebody is not a millionaire. Do you guys know what it means to be a millionaire? It means your net worth is over $1 million. It's not, or $1 million or more. It doesn't mean you earn $200,000 a year, but you're spending 180 of it on debt and stupidity, on lifestyle, and you're only saving 20 grand a year. That guy's net worth is probably negative because of the house he bought makes him negative 800,000. I'm talking about a millionaire. The house, when you add in the house and everything, their equity versus what they owe in debt in that house is positive. Their net worth is $1 million or more. That's what a millionaire is. It doesn't mean, heck, I like definitions. All right. A millionaire is someone with a net worth, assets minus liabilities of at least 1 million units of a major currency, typically US dollars, though that definition can also refer to high annual income for tax purposes or simply a very wealthy person. And see these other two at the end right here, the high annual income, or this one at the back, is what people think. The first one right here is always what a millionaire has been. The value of assets like real estate, investments, cash, and businesses are all included, while debts like mortgages or loans are subtracted. Net worth. The most common definition is having 1 million in total assets. What you own minus your debts, what you owe. So this house I'm in right now, I'm in more debt than I have equity. What do I owe? Like 640 on this house still. But I only bought it on Valentine's. It'll be 4 years. So I'm at the beginning stages of owning this home. So the interest rate, my interest rate is 3.375. So it's a good interest rate. It's phenomenal. But most of the interest is what I'm paying right now at the front. Now, give me 22 more years and I'll be at 26 years owning this home, 4 years left. The interest will be like this and the principal will be like this for what I'm paying. That's just how mortgages work. So I would then be more on that side of what he's talking about. So he said his millionaire friends don't live like that. Let me tell you something. He said they don't floss like that. Floss is for fakers, right? You're driving the Porsche. You're driving the Lambo. You're driving all this stuff. And what it is that you're high earners. That doesn't make you a millionaire. And that's the difference. A high earner is not necessarily a millionaire. And the millionaire next door, and this is kind of boring if you're, but listen, this is for mature people, man. So if you need to be entertained all the time, today's probably not for you, right? Plus, I'm not my usually high-spirited self. I'm not down in the dumps either. I just slept in today. I didn't go to the gym this morning. It was cold in the house, so I didn't want to get up. It's wintertime, right? And yesterday it was 60 something. It's been in the 70s, but hey, even Southern California, it's still bright outside. Even Southern California can get down into the 30s. It did. When it's cold outside. The chat. Yeah, so anyway, floss is for fakers. High earners are not necessarily millionaires because you could be a high earner and go broke. Well, if you're broke, you don't have $1 million net worth. You don't, or you wouldn't be broke. You still be a millionaire. But broke really refers to when your debt to income ratio is too high, right? And lenders don't like you to have a debt to income ratio 43% or above, but they'll still give you the loan a lot of times, but they don't like it. And that's why your credit score will come down because part of your credit score, your debt to income ratio does weigh in on that. So just think about it. But in A Millionaire Next Door, it was written in 1996. There was a guy who was earning $50,000. Now, in today's money, well, let's just ask. Let's see what it says. Now, you see what I ask it. I ask it. I can't get that ED at the end. Ask. $50,000 a year in 1996 is how much per year in 2026? Well, based on historical inflation data and current economic projections for 2026, $50,000 in 1996 has the same purchasing power as approximately $230 today. So I was going to say it was probably double, but I didn't want to get ahead of myself. I could have said it because I was just going to ask and y'all would have saw if I was going to be right or not. But so the guy was making $50,000 in 1996 and he was a millionaire. He had like $2.1 million in net worth. And you might say $50,000, but this is why I said 1996 because I didn't want you trying to utilize your right now brain, your 2026 brain. Okay, in 96, $50,000. Think about it as $100,000 is what I'm saying. So he wasn't making a small amount of money, right? Well. He had like $2.4 million or $2.1 million. But other people in the book were earning 80 grand, 100 grand, 200,000. Other people were earning higher than that. I think he was probably the one in the book with the millionaire status that they had interviewed that earned the least. But I think he was one of the ones. He didn't have the most, but he wasn't the least on the totem pole of millionaires. He wasn't. And you might think, how did he do it all from $50,000? Well, he kept his debts low. He had a truck that was older, and he did the maintenance himself. He had car. None of these millionaires, their cars were new. That's the first thing. These high earners, they always have new cars, right? So if they're trying to be, this is how you can spot a faker. If they're flossing, they're faking. And this is how you can spot the fake, right? We should play a game. Spot the fake. Millionaires do not drive new cars. Most of their cars, that book said they were like 5 to 8 years old, and they'll tell you the same thing. He's telling you they don't buy private jets. So if they have a private jet, they probably do have a millionaire status because private jets cost a lot. Let's see. How much does the average private jet cost? Okay, the average jet cost varies wildly from under 1 million for used very light jets to over 100 million for ultra long range models. Why would anybody pay that when the maintenance and the fuel costs and the crew that you have to pay is extremely expensive? I'd be like John Hope Bryant. If I'm using that jet to make money, yes, I would absolutely do that. But let's not deal with the jet. Let's deal with the normal stuff. So, new car, probably a phony. Um, Tons of clothing and designer brands and stuff, probably a phony. That's flaws, right? The millionaire will buy normal stuff and they'll buy it on sale because they realize that their money is, and you may think, oh, that's so cheap. No, it's so frugal. It's frugal. It's not cheap. It's actually very smart. I tried to use CH, but I couldn't do it. It's actually very smart. Um, so just think about it like this. Why pay full price for something you can get on sale? Now, if that makes sense for the common man, why doesn't that make sense for the millionaire? Well, he can pay full price, but why would he? If you like a sale, so does he. You like to keep your money in your pocket. You earn 30 grand a year. He likes to keep his money in his pocket and he earns 300,000 a year. And we also got to stop that too. See what I just did? 30 grand, 300,000. I made him 10 times more of the income. Watch this. You earn 30,000 a year and you like to keep your money in your pocket. He earns 75,000 a year and he's a millionaire and he likes to keep his money in his pocket too. You can be a millionaire from $75,000 a year. It's not necessarily what you earn, it's what you keep. It's taxes, that's one, and it's spending or lack thereof. And it's not just don't spend, spend on what? Millionaires spend on a lot. You know what they spend on? The first thing they spend on is their IRA, their individual retirement account. They put 10, 15, 20%. They don't even get it in their paycheck. They have it go straight to their IRA, their TSP, their 403B, their 401k. That's spending money. You just never saw it in your pocket because it's not where it belongs. That money is for later. It belongs there so it can work for you over the course of some years. The next thing they'll spend on, yeah, they may buy some real estate, a house for themselves. However, if it's just the two of them, there's the two of us. If we don't need more than a 1-bedroom condo, then we're not getting more than a 1-bedroom condo. So they buy enough house for what they need. Because even if they plan on having kids, and see, millionaires, everything's planned, right? They'll say, hey, we don't want to have a kid in the next 3 years. So let's be smart about what we do, when we do, and how we do. But 3 years? No, we're gonna plan everything. We're gonna cut every corner. We're gonna save all our money. We're gonna invest all our money. If we have a kid after that, fine, but we want to shoot for 5 years from now. 5 years to 7 years from now, sweet spot, good to go, right? And they'll do exactly that. And guess what? By the time that 5 years hit and they wind up pregnant, right? They will have hit the money mark that they needed to hit. And they will say, now, do we need a bigger condo right now? No, because that baby can sleep in our room until he's 2 years old, right? So now they start looking at the market. They start thinking about getting a renter, start talking to some people. And by the time they find a renter, by the time they might pull the trigger on it, they might be on their second kid, right? And now they need a bigger place. Great. Now, at that point, now they move out of that 1-bedroom condo, make sure it's rented and make sure it's paying for itself. And now they move to a 2 or 3-bedroom home, right? And they buy enough house for what they need. So I'm just saying, so they might buy that, and then the next thing they buy is equities, stocks. So they spend money. They spend money. It's just, what are they spending it on? Flossers need to spend money on things that can be seen by everyone at once. So fakers, or flossers, they need to spend money on things that everyone can see. The real wealthy people spend money on things that can't necessarily be seen. So you can see my house, but you can't see how much equity I have in the home. You can see, you can't see my stock portfolio. You can't see it unless you're on here and I show it to you. But if I'm walking around, you can't see it. You can't see my bank accounts. You can't see my IRA. You can't see any of that. With a flosser, you can see the Jordans. Probably one of the first things you'll see. You'll see the Nike Techs, because we just learned what that was, right? You'll see what they drive. You know, I had somebody tell me one time, man, I don't need all that stock and all that kind of stuff. I don't care about a house. No one's gonna see where I live, but everyone will see what I whip around, what I drive. And I just looked at them. Conversation's over. Too far gone. You can't save everybody. If that's your mentality, you won't change that until you're ready. So why would I keep trying to convince you? Until you're ready to change, which is probably when you hit rock bottom, so be it. But you're not going to change until you're ready. All right. So let's get back on. We are on topic, but let's get back to it. So that's just it. The difference between a millionaire, somebody who's frugal, and somebody who's phony, there it is. They just don't live like that. And that's what John Hope Bryant was saying. So that's him. Also a good guy to follow. Let's talk about it.
She's talking about good debt and bad debt.
Let's go.
Good debt is tied to something that may appreciate. Homes, businesses. By the way, education is good debt. It is higher education.
Stop.
And by the way, I encourage everybody to go get an AI class like immediately. But so good debt is tied to something that appreciates. Bad debt is tied to something that depreciates.
Cars.
Shoes.
Yeah, let's go.
Jewelry.
Let's
The
go.
market on jewelry is crazy. But these things are going to depreciate over time. So you make money during the day. Here's one for you. You make money during the day. It's called making a living.
Come on.
Income, cash flow, making a living. The world's telling you exactly what's going on. You make money during the day,
but
you build wealth in your sleep. It's compounding. Stocks, bonds, homes, investment.
IRA.
Because it's supply and demand, finite real estate, they're not growing any more land. The homes, she's talking about good debt and bad debt.
That's what this guy does. Let's hear this again.
Good debt is tied to something that may appreciate.
Take notes.
Homes, businesses. By the way, education is good debt. It is higher education. And by the way, I encourage everybody to go get an AI class like immediately. But so good debt is tied to something that appreciates. Bad debt is tied to something that depreciates. Cars, shoes, jewelry. The market on jewelry is crazy. But these things are going to depreciate over time. So you make money during the day. Here's one for you. You make money during the day. It's called making a living. Income, cash flow, making a living. The world's telling you exactly what's going on.
Let's go.
You make money during the day. You build wealth in your sleep. It's compounding. Stocks, bonds, homes, investment. Because it's supply and demand, finite real estate, they're not growing any more land. The homes she's talking about.
All right, so you see what he's doing? That's where I'll be in a couple years. Give me a couple years. That's exactly what I'm going to do. And I'm going to go to the crowds of the people who do not know this stuff. And I'm going to bring this stuff. And I'm going to be loud, proud, and in your face, just like him. I'm going to be worse than DMX. I'm going to be like, all the crowd, get on your feet. Raise your hands. Let me tell you. Come back with that. We can split that. No, I'm just kidding. I won't do that. But I am going to be just like that because I actually believe in what I'm doing here. And I actually believe in the power of compound interest. Most people just don't know about it. You don't know what you don't know, but you can be punished. Or, ooh, I forgot about the soundboard. See, you wasn't here. Oh, my brother hooked that up for me. I appreciate that. That is that. All right, so look. um, yeah, so I believe in this, and so does he actually. Just that much. It is that serious. So when he speaks like that, dang, I wish it would stop reloading, but it doesn't. Oh, and here's another one. We'll do one last one.
Yes, cash is king. I personally won a real estate deal that I know I had to bring cash to the table in order to win. When I bought my first house, cash won the bid. But I do believe there is good debt. Leverage to make more money. Do not go into debt for liabilities. Go into debt to buy more assets, to cash flow you some money so that you can buy the liabilities that you want. I personally just went into debt. All I really did was get a line of credit off something that I bought cash. Yes, cash is king.
You heard that? Now, he said that really quickly. This is Aristotle right here. The Aristotle Investments or Honey Drill Network. Honey Drill. Um, he is a young guy I found on Earn Your Leisure a couple years ago. Also a millionaire, not a phony. Listen to what he's saying. He is not a phony. This guy actually, he's in Puerto Rico right here. He recently, last year, believe at the beginning of last year sometime, he bought a house in Puerto Rico. And he did that because Puerto Rico is in the US. It's one of the territories, right? Guam, Puerto Rico, and a couple other places, right? Well, if you live in Puerto Rico for at least 6 months out of the year, your cash, your taxes are like cut almost to nothing. And so he's from Atlanta, actually, but he moved his family to Puerto Rico last year. This guy's not a phony, but let's hear again what he's saying. And he says cash is king. I believe credit is emperor, and I'll explain why after he's done.
I personally won a real estate deal that I know I had to bring cash to the table in order to win. When I bought my first house, cash won the bid. But I do believe there is good debt. Leverage to make more money. Do not go into debt for liabilities. Go into debt to buy more assets, to cash flow you some money so that you can buy the liabilities that you want. I personally just went into debt. All I really did was get a line of credit off something that I bought cash. Yes, cash.
So he said that now this guy, he used to serve in the military. He was in the army for a couple of years and they lived off of his paycheck, but he had a high school sweetheart that he married. And she was earning, I think they were earning like 2 grand off of his army paycheck. Well, they were earning like 1,500 off of her money. They took her whole money, her whole paycheck, and they invested it. And he learned how to trade. He learned how to invest and he learned how to trade, right? Invest is just buying stocks for the long haul. He learned how to also trade stock options, day trade. He learned how to do options and he also learned how to day trade. And that's how he became a millionaire. He also started cutting hair. So he learned a hard skill on his own. He didn't go get a license. He just started doing it. And he was netting a couple grand a month from that. He did all his army buddies. He cut their hair. And so here's his 9 to 5. That is the army. He starts cutting hair as a side hustle. He takes his wife's money and learns how to day trade that. When is he sleeping? When did I say video games? He says he'll tell you he stopped playing video games altogether because the return on investment was not going to be high from having a KD spread on Call of Duty of 15. Sounds fantastic, but what sounds more fantasticer? KD spread of 15 and having medals for never having died during the match, or being a millionaire and living in Puerto Rico. And see, most people will say, well, you gotta have fun and you gotta live a little. Oh, he's living. He's living all right. But see, it's just that most people can't be this dedicated. It takes two vital vitamins or nutrients that most people are missing. Number one is the discipline to not waste your time and doing things that have chat's already on it. Not waste your time doing things that have no return on investment or a negative return on investment for you, and consistency in doing that discipline over and over and over again. And you'll be there. I'm on my way. It's a rocky road, but I'm on my way. But cash is king, credit is emperor. This is how I look at this, right? Everybody looks at an emperor like he's the same as a king, right? I don't look at that way. Let's say, let's take South America, right? The shape of the continent. To me, it looks like Africa, right? It looks like the little brother of Africa. Or maybe it's the wife. I don't know. If you put them together, one like Africa would like spoon it. Is what it looks like. It fits together. Pangea, remember? The one big landmass. So here's my point in saying that, right? Let's take South America. Now, all of those countries, Venezuela, Colombia, Chile, along the coast, right? Let's say every single one of them had a king. But there's one ruler for the whole landmass. That's the emperor. Every king is going to bow to the emperor. The emperor is the actual ruler of all of South America. And he just broke his lands up into all these different countries to allow the kings to rule theirs. It's the same concept of having a president and having senators for each state, 2 senators for all of the 50 states, right? It's the same concept of having a monarch, of having a king, and then having dukes and earls. They're really the kings, the lords of their lands, but they are just not called kings. All he could change their title to king and change his title to emperor, and it'd be the same thing, right? But what he's saying is totally key. And that's really all I have for you guys this week. I was gonna play this Charlie Munger video this week, but I will save this one for next week. I will put it in the watch later. Oh, it's already there. It's already in watch later. So I'll just keep it. I may even keep it loaded or whatever. And so we can talk about it. No, I did not. So chat asked if they missed about Venezuela and the news going on in Venezuela. Okay, I'll speak on that really quickly. So Venezuela, we know what just happened. The president ordered them to go down there and capture their president and his wife. And so they did that, brought them here to America, put them on trial and whatnot. Now, I don't want to deal with the political side of that at all. But I did tell my Discord about what you should invest in if you want to try to eke out some profit off of this whole thing. And let me see if I can find it in here. I remember a couple of them. Here we go. So Chevron, ConocoPhillips, Schlumberg or SLB. I think that was it. There was a couple more, and it was these guys. This video right here, New Year's investments. It was Market Mondays. They talked about it here. And if you want the whole list, go look at their Market Mondays video. They only have one for the year. And they have the timestamps in there where they talk about Venezuela. They give the companies to invest in there. And it might be a 10, 15, 20-minute segment. The show went from 1 hour at its inception in 2019. And I think in like 23, they started going a little longer than an hour. In 24, they were like an hour and a half. Last year and this year, they were like 2 hours. And it's just because that's how it goes. They have a great product. They have like 8,000 people watching live, and these people want the news, and it's very profitable for them, so they do it. But if you want it more, they have more in there. I think I took some more notes in my phone. If I can find them, I'll pull them up really quickly. Uh, Let me see. Chat, if there's anything y'all want to throw in there, feel free to do so. Um, I know I took some notes on this. I just don't remember which one I put it on. Yeah, I don't see it. But that's the skinny of it. The oil the oil or petrol industry, crude oil industry has been a gigantic focal point of this whole Venezuela mess because most people think that we're only down there for their oil. And then right here, you see the president is saying oil companies will spend 100 billion in Venezuela with U.S. protection. So he's telling you right now. See, when you see these headlines, sometimes people get too political. And actually, Chad, thanks for that. That was actually my brother that asked me that. Because I forgot to touch on this, and I don't know how I forgot. I watched all the news on it. I listened to all of this stuff, and I just forgot. So there I am, being human. Anyway, so when you see this headline, right? Trump says, not President Trump, Trump says oil companies will spend $100 billion in Venezuela with U.S. protection. I'm going to tell you what most people do. Most people come and they see this through the lens of a red lens, and they say, oh, yay, Republican. Everything the Republicans do, I'm with it. Fist pump. A diss. A diss. No, I'm just kidding. But they say red lens. I see everything they do, and I approve this message. The president is the greatest ever, and, he can do no wrong. So I approve of it. And they think no further into it. Now watch. Here's the other side. There's a million things I could pick up, but this is the most Lindsay kind of thing I have. See, it's translucent. You can see my eyes through it. So they say, oh, blue. Oh, this president sucks. Democrat Party. This president's a Republican. The House, the Senate, Republican. I hate red. I only see blue. Trump did something else. Not President Trump. Trump. Oh, Trump says oil companies will spend $100 billion in Venezuela with U.S. protection. So we took over Venezuela. We took them prisoner. Everybody in Venezuela right now is a prisoner of the U.S. Because it's red. Red is bad. Red, you're dead. But blue, I think of something. Blue's okay. So blue is okay. Everything blue does is fine, but red, you're dead. Don't listen to them. So they're going to spend all this money. Oh, all these oligarchs and these tycoons are going to go there and they're going to raid this country of their natural resources. And we're going to rob them of all their oil. And then we're going to come back to the U.S. and use it for us. That's the blue. So red lens, blue lens. Let me tell you what I think. Red lens wrong, blue lens wrong. You know why? Because you shouldn't be looking at everything in a vacuum. Not everything red is wrong. Not everything blue is right. Not everything red is right. Not everything blue is wrong, right? Stop looking at things. If you really want to succeed, listen, you have a family and you're somebody's predecessor. Think about it like that, or you could be, right? You're somebody's ancestor. Your ancestors want to look at you, if you believe in that sort of thing, look down at you or look up at you. I don't know. But they might be looking at you. For sure, they can see you. If you are a Christian, you know that they can see you, because in the story with Lazarus, not Jesus's friend, with the shortest verse ever, where it says Jesus wept because his friend had died. The other Lazarus, where they were talking about the rich man who had money, who had wealth, who had dogs that ate from his table, that he was sick, on Lazarus the sick and poor man that was begging at his gates for just the crumbs on his table, and he sicked the dogs on him, and the dogs came and licked his wounds. Lazarus died of starvation and disease and stuff like that, right? But he went to heaven. The rich man, because he had an opportunity to do good and he did not, went to hell. And he could see Lazarus up there in heaven and ask Abraham to have Lazarus dip his finger in water and touch his tongue. Now, I'm not trying to be too religious about this, but I'm just saying this. He asked, can you send him back to warn my family? Or send me back to warn my family. And he was like, look, you ain't coming back from where you are. So if you believe in that sort of thing, just get what I'm saying. If you believe your ancestors can, or your predecessors can see you, you want to make them proud. If you want your ancestors, the ones who come after you, to be proud of you, in the same breath, you got to stop looking at everything from a political lens. Political lenses is what's getting people killed out here doing stupid stuff, like the lady shot in Minnesota. Why on God's green earth would you? Now this will be kind of politically charged, but chew the meat, spit out the bone. Eat the meat, spit out the bone. It's a Southern saying. If it's not for you, it's not for you. Just get the meaning behind what I'm saying. I'm not saying the cops were right. I'm also not going to say they're wrong. But what I am going to say is a lesson that my mom taught me. My mom taught me. It's funny, my dad never taught me this. He just taught me to not do stupid stuff. But my mom used to always say this straight. Never put your life in someone else's hands. Now, what she could have said, a precursor to that, is if you value your life, never put your life in anyone's hands. She also could have just thrown it in at the end. Never put your life in someone else's hands if you value your life. Either way, it was implied, and she knew I was smart enough to understand that, right? And in not saying that, she's also telling me indirectly, your life has value and it's precious. Don't put it in someone else's hands. Otherwise, you wouldn't even have to say that, right? So all this politically charged stuff where you only see through a blue or red lens is what's getting people killed and what's getting people doing things from emotional standpoints, emotionally charged actions, right? And it's getting them locked up or killed. People, once you lose your life, you can't get it back, right? So whether you agree with that or not, I'm not here for that. But stop seeing things through blue and red lenses. In fact, put them together. You know what this is together? Now let's look at this title from a purple lens. Because we have to see it from a purple lens in order to get to the green. If we like money, if we like wealth, notice I didn't say love. The love of money is the root of all evil. If you like creating wealth or love the fact that, or the idea that you can take care of your family, if you just but see things through a purple lens, then you need to get there. Now, let me show you how to see this. President Trump says, and that's just showing respect, right? If it was Obama, it's not Obama, it's President Obama. I don't care. It's whoever's in office. If it was Bush, it's President Bush. It's not just Bush. President Trump says Oil companies will spend $100 billion in Venezuela with U.S. protection. Okay, I just read it, right? Now watch this. President Trump says oil companies will spend $100 billion in Venezuela. What oil companies? Oh shoot. Let me look down. Oh shoot. What is VLO? What is all of this? Let me look this up. Oh, Shell, CVA. Is this Chevron? What are these? Let me find this out. Hold on. Let me wait. With US protection, they're going to have US protection. Well, what's the biggest oil companies I know? Chevron, British Petroleum, BP, Exxon Mobil. Let's see if they have anything. And then I would Google those companies and see if they're going there. Schlumberg, SLB, like I just said, is all. I think they were already there. But in this article, it says this. I would look these up and look and see what this is. Is this Halliburton? What is this? Yeah, Halliburton. Okay, so I would be looking this up because what the article is doing is not trying to offend you. And that's the lenses, right? Red or blue. What it's actually doing is trying to inform you of what's going on, not just what's going on, but if you can read between the lines, I'm also informing you or telling you indirectly for the people who are not offended, the crowd that didn't get up and run out with picket signs and start marching, the crowd that's left, you're the ones that can read between the lines. Look at what I'm telling you. I'm telling you that what industries are about to boom. And that is the petroleum or oil industry. And now scroll down a little bit. Key points. There it is. President Donald Trump, that's showing respect, and oil executives are meeting in the White House to discuss investment in Venezuela after capture of President Nicolas Maduro. It takes feelings out and it put fact in. ExxonMobil, ConocoPhillips, and Chevron attending among other companies. Now, what did I just say? The biggest companies you know of. British Petroleum isn't in there, but 2 of the 3 ain't bad. What, isn't that a country song? 2 out of 3 ain't bad. So Trump said oil companies will spend at least $100 billion to rebuild Venezuela's energy sector with U.S. protection. Now they said energy sector. So now after petroleum, there might be electric companies coming down there. I'm just saying, it's informing you one way or another. So if you wanted to invest in Venezuela to help rebuild, because that's what they said they're doing, you could invest in this petroleum, because that sector is going to help them with jobs, infrastructure, and all of that kind of thing. So if you wanted to do that, you could do that. Your reasoning could be different. If you wanted to just make some more wealth for your family, well, there you go. It doesn't matter. Intent does matter, but get to it, whatever you're going to do. But if you're too offended or you're too red or too blue, you're going to miss it. You're surely going to miss it. Chat, you have anything on that? Look, here we go. Just scroll a little further. Here we go. ExxonMobil CEO Darren Woods. Now you know who the CEO is. ConocoPhillips CEO Ryan Lance and Chevron Vice Chairman Mark Nelson. Now you know who the Vice Chairman of ExxonMobil is. Now you know, Chevron. Now you know to go Google who the CEO is. I'd look all these up on Robinhood and get all the CEOs, or just Google it and get the CEO, the chairman, get the CTO if it's a tech. These are not tech companies. The CFO, the money man, the chief financial officer. I get all that. Executives from Halliburton, Valero, which is also gas. That's out here. Actually, I think Valero was in New York as well. Marathon is in the Northeast. were present among others. Oh, there's more than that. Let's keep scrolling and see if there's more. Do you see how you should be looking at an article if you like green? If you like green, then you better love purple. I know it's the color of royalty, but it's also the color of correctness if you want to actually cut to the chase and not be offended. I'm just perusing through here, but I'm sure there's more. But it's just basically giving you why. Venezuela has the largest proven crude oil reserves in the world at 303 billion barrels, or about 17% of the global total, according to the U.S. Energy Information Administration. There you go. That's why. That's why. And if you went and combed through this, you could see more. Now, watch this. That was just one article I clicked. I found all of that with a quick Google search. The Google search took less than 10 seconds. Y'all saw it. And just combing through one article, look at how much you can find. So it's not that the information is not out there, it's that you guys are too offended to even look. Working with Chevron. Now look at this. Encourages companies to make large investments in a country with a history of nationalizing industry assets. Chevron is the only U.S. oil company currently operating in Venezuela. A joint venture with state oil company Petróleos de Venezuela, or PDVSA. Energy Secretary Chris Wright told CNBC Wednesday that the U.S. is working closely with Chevron. Chevron is on the ground, so we're getting daily updates. Wright told CNBC. We're actually working under this regime. So with them, I think because they left the vice president in charge over there, they only whisked away the president. So with them, how can we provide incremental tweaks or changes to allow their model to grow even more? All right, Venezuelan productions. All right, so let's get past that. Now look, Exxon and Conoco doubts. Now they're talking about doubts, but here, this was Chevron. Here's Exxon and Conoco. Leveraging oil sales. Look, there's a lot in this article to pick through. So if you did not, you could actually, well, instead of doing that, let me see. Let's see if it can do this. Look, hey, John Hope Bryant said when he was on stage in the suit, he said he would recommend everyone go take an AI class immediately. Immediately, right? Well, you just got one. You can copy and paste the link and tell AI to summarize the link. You just got one. And you know what? I might be the blacksmith and I'm 39 years old. I'll tell you who's actually teaching me the most about AI. Hands down, bar none, I learned the most from this dude than I learned from anybody else concerning AI. My brother, who's 25. And he's utilizing AI to animate an anime that I've been writing for the better part of like 20 years. But I've been mostly off, not on. But he's animating it now. So the project is back on, and we've been in business for a year. And he's taught me the most about AI than I've ever learned from anybody else. I'm just telling you. I mean, he's taught now the theories and stuff behind AI. I've listened to, there was a gal who came on Earn Your Leisure, and she's like a scientist or whatever, and she works with AI. And then they call her the godmother of the queen of AI, Alicia Little, I think is her name. I learned some stuff from her about AI, but pound for pound, I learned the most from it, most about it from a 25-year-old dude that is my youngest brother. Absolutely. He is incredible when it comes to AI because he actually understands it well enough to be a prompt engineer is what I keep saying they're going to invent. He already is one. But look, it summarized the whole article for you. So you don't want to do all that reading? There you go. There you go. What more can I say, people? What was the other thing you wanted to talk about? Venezuela or housing declaration? What is that? That's the thing you told us about before. I think it was the president was saying that he was trying to get. I think I know enough about what he's talking about to try to Google this. President Trump blocking businesses from real estate. Here we go. I knew enough about what he was talking about. Could President Trump bring down home prices by banning Wall Street ownership? Yeah, so my brother, he sent me this about the president blocking real estate from being bought from big companies. He issued an attention-grabbing proposal cracking down on Wall Street in an effort to lower home prices and ease affordability woes. So that's one way to ease affordability woes. The average person cannot afford the American dream anymore when the average standalone home costs anywhere from 416 grand to 520 grand. The average American has been locked out of the American dream. And is it fair? Fair or no, it is factual. It is factual. Whether it's fair or not is factual. I've been completely blessed, extremely blessed in my life to own 2 homes now. I only own one. I'm buying one, but to have been able to be a homeowner twice. I've never owned a home outright. I've always been paying a mortgage, but yeah, I've been extremely blessed to be able to do that in Southern California, where it's extremely expensive. Because don't just say because I'm a service member and I have a VA loan, not all service members own homes. I'm going to tell you that right now. I would wonder, you know what? Let's ask Gemini. It probably won't even be able to do this, but let's see. I meant to put a question mark there. I held shift down, but whatever. As of 2026, the home ownership rate among active duty service members is approximately 41 to 43%. This is significantly lower than the U.S. general population, which has home ownership at about 65%. All right, so there you go. In contrast, veterans have much higher home ownership rates, currently estimated at 78%. I will tell you why that probably makes sense. So being active duty, one of the main reasons why a lot of active duty do not own homes is because we move around a lot. Every 2 or 3 years, we might be jumping from region to region, and that's a lot of paperwork, and that's a lot of work to buy a home. 3 years later, buy a home in California, 3 years later, have to pick up and move to Virginia, try to find renters or sell this house over here. It's probably less work than you think, but the average person does not like to do a lot of work. That's why we have W-2 employees is like what 70% of people do, because it's easy just to go get a job, fill out an application, get a job interview, go work for somebody. The processes are already set. You just plug yourself into their process and their success, as long as you bring your effort, right? Most people do not want to do the outside stuff. That's why only 30% of people are like 1099 contractors, or their bosses, S Corps, LLCs, C Corps, stuff like that, or sole proprietors. Most people aren't going to do it because they assume all the risk and they take all the work, and you work 18 hours a day when you could just work 9 to 5. Most people, you can't even get them to work 8 hours a day. So when you talk about 18 hours a day to ensure you never work 9 to 5 again, most people wouldn't put in the effort. So this, one of the reasons is because we hop around. Another reason is because it's a lot of work. Another reason is because they know you take on all of the fixes and things when you own the home. Your microwave breaks, you have to buy another one. Your refrigerator breaks, you have to buy another one. Your garbage disposal goes out, you have to call the repairman. So you have to take on all those risks when you could just call somebody who owns the property. And another reason, I'll just skip to the ending portion here, that veterans probably own more homes than active duty is because they probably have double income. So the veterans are getting half of their, like if they retire, right? They're probably getting their pension and any VA benefits. So they're getting half of their base pay the rest of their life, and it's taxable. It is taxed. It is taxable because some states probably don't tax it. And that's one of the good things about being a veteran. And then your disability, which it doesn't matter what state you're in, they can't tax disability. So they're getting a pension and passive income the rest of their life. So if they go get a job earning what they did while they were in, they have a double income pretty much. And so they can afford it more is what I'm getting at. And if they have a spouse that works, their income just went through the roof, right? And part of it is untaxed. But anyway, so that's why I'm saying I've been extremely blessed to do it while I'm active duty twice, right? He is trying to stop corporations from buying up single family homes because if they're trying to get a house and you're trying to get a house, they could outbid you 2-1, and there's nothing you could do. They could drive the price up 50 grand. Does the average person have an extra 50 grand sitting around to cover that spread? Nope, they do not. And so he's trying to, I guess, in layman's terms, he is trying to get them to stop buying up homes. Let's use Gemini for this one. Let's be nice. Let's spell it right first. So basically what he's saying, he's trying to keep them from buying single family homes so he can lower the costs, shutting the average American out of the market. We probably will just go over this one next week. I'm kind of pressed for time as I'm way over today. But you know what, folks? It's been a great show. I hope you thought the same. Given a lot of information here. We've reacted to some videos and different things. I'm trying to change up the flow of the show so it is a little more interactive for you. When we get some more people on, a lot of people couldn't make the live today, but when we get some more people on the live, we're going to open up the mics and let them weigh in on these situations as well, because some of these are not just lessons to be taught, but conversations to be had amongst your community of like-minded people. So with that being said, the forge is going cold. I hope you have a great week.